Cryptocurrencies have transformed the global financial landscape over the past decade. Since the creation of Bitcoin in 2009, thousands of digital assets have emerged, each with different value propositions. Investing in cryptocurrencies generates both excitement and skepticism, raising a fundamental question: how convenient is it really to invest in them? This report analyzes the pros and cons of investing in cryptocurrencies, considering economic, technological, regulatory, and security factors, as well as future perspectives. Cryptocurrencies are digital assets based on blockchain technology. They use cryptography to secure transactions and control the creation of new units. The most well-known include Bitcoin, BTC, Ethereum, ETH, Binance Coin, BNB, among many others. The most popular digital currency, which rose throughout 2023, is approaching its all-time high. But does this stability and strong performance make it safe and reliable? In January, Bitcoin turned 16 years old. So far, the milestone has been sweetened with good news, especially for those who invest in the most famous and popular cryptocurrency in the market. This week its price traded above $52,000, consolidating an upward trend that brings it closer to the all-time high reached in November 2021, when it briefly hit $68,000. Bitcoin has shown remarkable growth since the beginning of 2023, climbing from around $16,600 to over $50,000 this year, highlighting its strength and potential to shape new bullish trends. Adding to the upward valuation is the recent approval by the United States Securities and Exchange Commission, SEC, of the first Bitcoin ETFs, exchange-traded funds. This is a true milestone for the cryptocurrency, considering the regulator had denied authorization for 10 years, and now it opens new paths for investing in digital currencies through publicly traded assets. This step reaffirms Bitcoin's value as a financial asset, but it also introduces more volatility to a currency that has historically been volatile. That's one of the many challenges the cryptocurrency still faces, alongside achieving broader acceptance in new markets and improving security against cybercrime, both of which affect its reputation and risk profile. With all this, is it a good time to buy Bitcoin? Bitcoin's creation was motivated by the desire to provide a decentralized, secure, private, and censorship-resistant electronic money system, says Claudio Escobar, MBE and professor at the Faculty of Economics and Business at U. Alberto Hurtado. 15 years after its launch, have these initial promises been fulfilled? According to Escobar, they have. And this is largely thanks to blockchain, the system underlying Bitcoin's operations. In the academics' words, it is a distributed consensus mechanism that records all transactions in a blockchain, ensuring that each transaction is unique and verifiable by all network participants. Experts explain that blockchain not only offers security and transparency but also protects against censorship and manipulation by centralized entities. Bitcoin's deflationary nature, with a predetermined maximum supply, has positioned it as a store of value, often compared to digital gold, explains Escobar. It has also enabled unbanked individuals around the world to access financial services and facilitated international transactions efficiently. For all these reasons, Escobar believes that Bitcoin has undergone a remarkable evolution, not only maintaining its status as the leading cryptocurrency in the market, but also inspiring the growth of an entire ecosystem of innovation in decentralized finance, DeFi, including a wide variety of digital currencies such as Ether, DeepOnion, Ripple, and others. This rapidly evolving ecosystem now has tens of millions of monthly users and is giving rise to new infrastructure, financial services, and entertainment, says Christopher Storaker, CEO of Arch Finance, a fintech company focused on crypto savings. All of this has made Bitcoin a highly attractive asset for investors and speculators. Often, strengths are also the biggest weaknesses. That's the case with Bitcoin, whose decentralized nature and promise of anonymity have allowed it to be used in illicit activities, affecting its public perception. Another key issue is the regulatory challenge. Gonzalo Munoz states that its acceptance is still limited in sectors like banking, government, retail, real estate, utilities, and insurance. This is mainly due to concerns over volatility, regulation, and security, as well as a general caution around financial and regulatory risks. Indeed, volatility is one of the biggest challenges Bitcoin still faces. Munoz explains that Bitcoin is highly sensitive to news that could change its nature or structure. This sensitivity will likely be tested again in April, during the upcoming halving, a scheduled event that, according to the analyst, cuts in half the block reward received by Bitcoin miners. The halving occurs every 4 years and is Bitcoin's way of self-regulating to avoid inflation due to the continuous creation of new coins. Claudio Escobar notes that this volatility can discourage its use as a medium of exchange for everyday transactions and pose significant risks for investors. Everyday use remains complex, and thus continues to be a challenge for the cryptocurrency. However, the introduction of the so-called Lightning Network aims to improve the feasibility of micropayments and daily transactions. Despite its volatility and regulatory challenges, Bitcoin offers unique opportunities for diversification and long-term growth potential, says Escobar. However, it's crucial to approach investing with caution, education, and a well-thought-out strategy, keeping in mind the risks and the ever-changing dynamics of the crypto market. Strategy is everything. Nothing is random, adds Munoz, who explains it like this: so far, Bitcoin has gained momentum and surpassed $52,000, and it is just as likely to reach new all-time highs as it is to fall to technical support levels, around $38,000. That's why it's essential to carefully analyze the best entry point according to the capital you plan to invest. That's why it's so useful to learn how to read indicators and interpret the technical context in which assets are positioned. In Bitcoin's case, Munoz says, it may be advisable to enter the market during corrections within planned ranges and capitalize on the asset's upward impulses to generate profits. Christopher Storaker recommends following specialized outlets such as CoinDesk and Cryptonoticias to stay informed. And for more in-depth content, The Defiant. Staying informed about safe handling and storage practices for cryptocurrencies is also essential, such as two-factor authentication and cold storage, i.e., offline storage that can't be hacked. For this, cold wallets have become increasingly popular. Escobar also recommends staying up to date with local regulations and tax obligations related to cryptocurrency investments. In what contexts and markets is Bitcoin a convenient alternative? According to the interviewees, some relevant scenarios include international remittances. Bitcoin offers unique advantages due to its efficiency and low costs compared to traditional channels, says Escobar. Economies with high instability or inflation. Many people use cryptocurrencies as a safe haven asset in response to volatile currencies and rising inflation, as seen recently in Argentina, explains Nicolas Jaramillo, co-founder of Arch Finance. E-commerce and digital markets, which also benefit from secure and global transactions enabled by Bitcoin. Escobar believes that those looking to invest long-term and with a tolerance for risk, as well as those wanting to diversify their portfolios beyond traditional alternatives, may find Bitcoin an attractive option. It will be important to monitor the implementation of the fintech law regulation, published last year in the country, which will lead to greater oversight of the cryptocurrency market. For consumers, this law promises to improve the security and transparency of digital financial services, including those related to cryptocurrencies, which could increase trust and facilitate the adoption of Bitcoin as an investment and transaction tool. How to avoid cryptocurrency scams. Scammers are always looking for ways to steal your money using cryptocurrencies. Here are some key things to know to avoid falling for a crypto scam. Only scammers demand cryptocurrency payments. No legitimate business will require you to send cryptocurrency up front, whether to buy something or protect your money. That's always a scam. Only scammers guarantee profits or high returns. Don't trust anyone who promises you'll make quick and easy money in the crypto market. Never mix online dating with investment advice. If someone you met on a dating site or app wants to teach you how to invest in crypto or asks you to send them crypto, it's a scam. Spotting cryptocurrency scams. Scammers are using the same old tricks, only now they want payment in cryptocurrency. Investment scams are a leading tactic to fool people into buying crypto and sending it to fraudsters. But they also impersonate business reps, government agents, romantic partners, and more. Investment scams. In crypto investment scams, you're often promised big money with zero risk. These scams frequently begin on social media or dating apps, but they can also start via text, email, or a phone call. In these scams, crypto plays a central role as both the investment and the payment method. Here are some common crypto investment scams and how to spot them. A so-called investment manager contacts you out of the blue. They promise to multiply your money, but only if you buy cryptocurrency and transfer it to their online account. The investment website they direct you to might look real, but it's fake, just like their promises. If you log into your investment account, you won't be able to withdraw your money at all, or only if you pay steep fees. A scammer poses as a celebrity claiming they can multiply any cryptocurrency you send them. No celebrity is contacting you on social media. It's a scam. If you click on an unexpected link or send crypto to a supposed celebrity's QR code, that money goes straight to a scammer's wallet, and it's gone. An online lover wants you to send them money or crypto to help them invest. That's a scam. As soon as someone you met on a dating platform asks for money or offers to help you invest in crypto, it's fraud. Any crypto or money you send will disappear, and you're unlikely to recover it. Scammers guarantee you'll make money or promise high returns. No one can make such guarantees, especially in a short time frame. When it comes to crypto investments, nothing is low risk. If someone or a company says you're guaranteed to profit, it's a scam, even if they feature endorsements from celebrities or fake investor testimonials. Scammers promise free money. Whether in cash or crypto, offers of free money are always fake. Scammers make bold claims with no details or explanation. Whatever the investment, ask how it works and where your money is going. Honest investment professionals will give you clear information and back it up with details. Before investing in crypto, search online using the name of the company or person and the name of the cryptocurrency, plus terms like review, scam, or complaint. If you're searching in Spanish, read what others say and learn about other common investment scams. Business, government, and job offer impersonators. In scams involving impersonators of businesses, government agencies, or employers, the scammer pretends to be someone you trust to convince you to send money by purchasing and transferring cryptocurrency. Scammers pretend to be from well-known companies. These scams often come in waves, and fraudsters may claim to be from Amazon, Microsoft, FedEx, your bank, or others. They might send a text, email, call you, message you on social media, or even trigger a pop-up alert on your device. They might claim there's fraud on your account or that your money is at risk, and to fix the issue, you must buy crypto and send it. But it's a scam. If you click a link, answer a call, or call the number from a pop-up, you're talking to a scammer. Scammers pose as new or established companies offering fake crypto coins or tokens. They may claim the company is entering the crypto space and issuing a new coin or virtual token. To make this believable, they might post social media ads, fake news articles, or build flashy websites. But these coins and tokens are fake, and people who buy them lose their money. Research online to see if a real company has launched a crypto token. It will be widely reported by established media if true. Scammers impersonate government agencies, law enforcement, or utility companies. They may claim you have a legal problem, owe money, or that your accounts or benefits are frozen due to an investigation. They tell you to resolve the issue or protect your money by buying cryptocurrency. They might ask you to send it to a wallet address for protection and safekeeping. In some cases, scammers stay on the phone while guiding victims step by step to a crypto ATM, instructing them to insert cash, convert it to crypto, and scan a QR code, sending the funds straight into the scammer's wallet, never to be seen again. Scammers post fake jobs on employment websites. They may also send unsolicited job offers involving cryptocurrency, asking you to help recruit investors, sell or mine crypto, or convert cash into crypto. But these jobs only materialize if you pay a fee in crypto, always a scam. Often, they'll send you a fake check to deposit, tell you to withdraw some of the money, use it to buy crypto for a fake client, and send it to a wallet they specify. Once you do that, the money disappears, and you're left owing your bank the funds from the bounced check. To avoid business, government, and job offer impersonators, remember, no legitimate business or government agency will email, text, or message you on social media asking for money. And they'll never require you to buy cryptocurrency or pay with virtual currency. Never click on unexpected links in emails, texts, or social media messages, even if they seem to come from a company you know. Don't pay anyone who contacts you unexpectedly and demands cryptocurrency payments. Never pay to get a job. If someone asks you to pay up front for a job or tells you to buy cryptocurrency as part of a job, it's a scam. Investing in cryptocurrency may be a smart move, but it's not a decision to take lightly. Its suitability depends on the investor's profile, risk tolerance, market knowledge, and financial goals. For some, cryptocurrencies offer a historic opportunity to achieve high returns and participate in a new technological paradigm. For others, it may be too volatile and risky. The key lies in financial education, diversification, and sound risk management. And if you enjoyed this content, please subscribe and give this video a like. Remember, it's free, and it helps us continue creating quality content for you. See you soon.